Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Lots of cues to watch out for today. Yesterday, of course, we saw volatility kick in the second half of the session, and the Nifty, in fact, even the Sensex and the entire market complexion completely changed in the second half of the day yesterday, and we ended significantly off the day's high, and the Nifty just about managed to end flat in yesterday's session. But this morning, global cues are not looking that encouraging. Wall Street ended mixed, and even the Gift Nifty is hinting at a subdued start for the Indian markets. But a lot of stocks will be in focus. Delta Corp has reported earnings, so that will be the stock of the day today. We'll be talking about that in details, and of course, we'll also be taking up all your stock-related queries with our experts on the show. So if you have any queries, keep them coming in on our YouTube feed. We'll try and take them up. But as usual, before we move further, let's take a look at the top stories at this hour. Wall Street ends mixed in a volatile session, with the Nasdaq ending with marginal gains. Investors brace for key inflation data later this week that could provide some clues on the Fed's rate trajectory and whether or not a March rate cut may be on the table. Asian markets are largely lower on a weak handover from Wall Street, but the Nikkei is extending its 33-year highs. The Gift Nifty, meanwhile, is indicating a subdued start for the Indian market. Crude prices rebound from 2 days of consecutive losses. Brent gains nearly 2% to trade above $77 a barrel as West Asia tensions and supply outages in Libya push prices higher. And among stocks to watch out for today, Delta Corp's net profit slumps 60% while margin contracts 1,300 basis points in the third quarter. Meanwhile, Moody's downgrades Vedanta Resources' corporate family rating with a negative outlook, says default risk remains high. Also in focus will be SpiceJet ahead of its AGM today. Without any delay then, let's bring on board our technical expert for today. Joining me is Milan Vaishnav, who's the founder of Gemstone Equity Research. Joining in, great to have you on the show, Milan. Yesterday, as I was mentioning at the start of the show, the entire complexion of the markets changed. The Nifty was gaining somewhere around 200 points at the start yesterday. But towards the end of the day, profit booking kicked in, and, we kind of wiped out all of those gains. And today as well, the Gift Nifty hinting at a subdued start. But what is that level that you'll be watching out for in the Nifty for the index to regain bullish momentum?
Yeah, Nandita, very good morning to you all. See, if we're talking from a very short-term perspective, I believe Nifty's price action vis-a-vis the levels of 21,500 would be very important to watch. That is because of two things. First of all, day before yesterday's low point of 21,492 needs to be protected. Otherwise, what happens that a large bearish engulfing candle that has happened on the Nifty will get confirmed, and it will lead to eventually the high point of Nifty getting confirmed as an intermediate top. That is one thing. Secondly, 21,500 has also seen consistent accumulation of the put oil, not if not for this week, but definitely for 18th January expiry for Nifty. So if that gets violated, then we will see Nifty drifting a bit lower than what it is right now. But having said that, whatever price action the Nifty is witnessing, whatever kind of retracement that the markets are witnessing, are in fact going to be very much healthy. Especially because of the kind of steep up move that we have seen. So by and large, 21,500 is something that I would be keeping my keen eye on.
All right, 21,500 on the index. Of course, that's the crucial support level that experts are talking about. But Milan, what about the Nifty Bank Index? Of course, for the last three sessions, we've seen this particular index, ending in the red, coming under selling pressure. Even day before yesterday, we saw it was the Bank Nifty that was the major culprit behind, the fact that, we saw weakness on the index or, in the overall market as well. But the index closed below both 10 and 20-day EMA, right? So going forward, what is the level that you'll be watching out for on the Nifty Bank Index also in terms of support levels?
46,800 to 47,000 zone. This 2,000 point zone is something I expect should land a very short-term feeble support for Nifty Bank. There are two things that I expect in Nifty Bank. First of all, it taking support in the zone that I just mentioned, which is 46,800 to 47,000. And after consolidation in that zone, there are chances that it might slip a bit lower. But we need to remember one thing, that any weakness in Nifty will have more kind of a bearish effect on Nifty Bank, because it continues to stay relatively weaker than Nifty. So 47,800 to 48,000 zone is what I'm watching at for Nifty Bank.
All right, those are the levels to watch out for on the Nifty Bank Index. Hold that thought, Milan. We'll come back and talk about other specific stocks and sectors as well. But let me also bring on board Sanjay Agarwal, who's the Senior Director and Head BFSI at Care Ratings, joining in this morning. Great to have you on the show, Sanjay. First of all, wishing you a very happy new year. I just wanted to understand, of course, we are all counting down to the budget on the 1st of Feb, right? Even though FM Sitaraman has indicated that the union budget or the vote on account is unlikely to hold any spectacular announcements. But is there any likely chance of any announcement on bank privatization? Because, if you see, relatively small banks like IOB and Bank of Maharashtra have been on the government's radar for privatization. Can we expect some bit of clarity on the divestment agenda when it comes to PSU banks?
Yeah, thank you, Nandita, for having me on the show, and happy New Year to you and to all your viewers. So in terms of the bank privatization, that has been in discussion for quite a few years now, and the specific names you took, they have been there in the discussion box. But if we look at the recent developments, these are the banks which have been doing much better than the rest of the banking system. The entire banking system is in a significant upswing right now, and these are the banks which have done much better than that. So there is no, let's say, a tearing hurry or a reason for consolidation either within the private public sector banks or through privatization for these banks to be consolidated into some other entity. So there does not seem to be too much of a reason for privatization as of now.
All right, that's the view then. But let's also talk about NPA management, right? NPAs were a big nightmare, for Indian banks at one point of time. But they've come down significantly in the past few years. In fact, we've seen strength in asset quality if you look at, banking earnings. But can we expect a further tweak or fine-tuning in existing policies? Do you expect any announcement with respect to NPA management? Because asset reconstruction companies, since they saw, since they showed limited results, do you think there could be some bit of fine-tuning when it comes to the NPA management, for banks?
So there are two aspects out here, Nandita. One is that in terms of improving the credit quality and the rights of the lenders to be able to enforce the credit decision, that government is on a constantly vigil and things are being taken up at a regular interval. So there's a lot of work which has already happened. Probably some work will continue to happen. So we are not able to comment on that. If you look at the NPA levels per se, I think we are at the lowest NPA levels we have ever seen in the banking system ever since the NPA norms were introduced. That is despite tightening of the norms over the years. So the NPA figures are excellent, very excellent. The credit costs are very low. Even the, let's say, the slippages or the restructured or SMA accounts, even those values are very low. So things are looking very good on that side. Probably we somewhere near the bottom or something like that.
All right. What are your own expectations from the finance minister this time around, when it comes to the entire BFSI space?
So we don't expect too much of, because as it is, it's an interim vote. So we don't expect too much of tweaking out there. The sector has been doing good. Probably some bit of push may come in for long-term funding, but then we'll have to see. But otherwise, it would seem be a more benign sort of a budget or a vote on account right now.
All right. Lastly, Sanjay, of course, we are knocking at the third quarter earnings season. Of course, as we already discussed, asset quality has been fairly strong for banks and profit growth has also been steady. But margins, that could come under pressure as deposits are still getting repriced. Do you expect margin pressure for private banks, especially the likes of HDFC Bank, given the fact that the merger impact is expected to play out for the next few quarters?
So I will not be able to discuss specific names in this let's say broadcast because of our requirements. But if you look at the sector as a whole, the Q2 numbers itself compared to Q1 were very flattish in terms of the profitability, both for the private sector bank and the public sector bank, except the profitability of HDFC Limited, which got added to the banking sector in Q2. So we expect a similar sort of a trend happening out there. So we do expect pressure on profitability. because the NIMs are low and they probably would further, let's say, consolidate 20-30 points in the next couple of quarters. And as I said, the credit costs are at pretty low level, so we don't expect too much of a compression therein. And operating costs will continue to be where they are, like the banking system has been growing. You also have costs of wage revision, inflation, etc. biting in. So we expect that the profitability to be subdued and moderated at the current level of probably slightly under pressure even on that.
All right, that's the view then and expectation from the third quarter earnings season from the banking industry as well. With that, Sanjay, thanks a lot for taking out time and joining in and sharing your insights with us. Always, a pleasure chatting with you.
Thank you very much.
Well, with that, let's go back to Milan and talk about specific stocks. Stock of the day today, according to me, should be Delta Corp, given the fact that it has reported a howler set of numbers, 60% drop in profit, on a YY basis. In fact, the revenue is also down somewhere around 15.5%, and margins have contracted by over 1,300 basis points. So margins have come in at 24% versus 37.5% on a YY basis. Of course, that the whole GST overhang has played out on some of these gaming names, so which is why Delta Corp has shaved off somewhere around 30% or 38% rather on on a 6-month basis. Going forward, Milan, what is the kind of level that you would be expecting on the downside? Do you think one should look at gaming stocks at these levels, or do you think they are complete avoid at the current juncture? Milan, is my voice reaching you?
Yes, I am able to hear you. There was some snag in my at mine. Delta Corp basically is doing nothing after forming a base near 124 levels. It has just been drifting lower in a very drifting higher, but not at all convincing. It is precariously hanging at its 100 DMA, and I believe that any negative impact can take the stock lower towards 140 levels. And any slip below 140 levels can make the stock even weaker. So I think Delta Corp must be best avoided so far as taking any fresh exposures is concerned. And those who are invested in the stock can see, wait and watch and see what the stock does near 140. Any violation of 140 should be a reason enough for us to exit the stock.
All right, that's the view on Delta Corp. But another stock that was under pressure yesterday was Polycab on rumors of some tax evasion, and of course the company refuting those rumors, saying there has been no tax evasion at their end, and that there has been no communication from the IT department as such, and they have been cooperating with the IT department. But the stock was down 8% yesterday, and if you look at the stock on a 1-month basis, it has shaved off 15% or thereabouts. So momentum has cooled off, so to say, but the stock did find favor with quite a few experts in the market. Going forward, we are getting quite a few queries on our feed on this particular stock. I can see Debu K, I can see some other names, RS Guru. All of them want to know whether or not the stock will head lower in the coming weeks. Raj Karnavat also wants to know your thoughts on this particular stock. Do you think one should use this opportunity to buy the stock, given the fact that it has seen a good up move over the last one month, in fact even on a 6-month basis? What would you advise investors to do with this particular stock?
Well, the idea is pretty much clear. So far as Polycab is concerned, even if we discard yesterday's price action, the stock has very much put a top in place near 5,500 odd levels. And if we take into account yesterday's price action, it has simultaneously violated both the 50 and the 100 DMA. And there are all possibilities that the stock may drift lower. So there are two distinct price action possibilities on Polycab. One is that it can drift lower. And the second thing is that even if it sees any rebound, the rebound is going to stay limited in its extent. So I don't think that any decline in the stock should be used to make any fresh entries. We must wait until there is some indications of formation of a bottom, and which is followed up by some confirmation. Until that happens, I think this stock also should be best avoided.
All right, best avoided. That's the call. Hope that answers your queries. But what about the likes of ICICI Pru, SBI Life, etc.? Because SBI Life, of course, saw a good uptick yesterday. 20% kind of growth in new business premium, right? So, and ICICI Pru, on the other hand, was a stock with high delivery percentage yesterday. Do you think these stocks will continue to see buying interest in the next couple of sessions?
Yes, I expect both of the stocks to continue seeing the buying interest, beginning with SBI Life first. Any move above 1470 is expected to take the stock higher. It is from the structural point of view, it is quite in a secular uptrend, and we can expect a good amount of move in SBI Life above 1470. Coming to ICICI Prudential Life, I think we must wait until the stock goes above 545 levels. Any move above 545 will invite some more upward momentum in ICICI Prudential Life. So both of the stocks look good on the charts.
All right, both of the life insurers, SBI Life and ICICI Pru, look good on the charts. Let's talk about a Shyam Metalics as well, Milan. It has raised somewhere around 1,385 crore rupees through a QIP. It saw an overwhelming response. In fact, bids worth 4,055 crores were garnered, and the company has issued 2.4 crore shares to 38 QIBs at an issue price of 576 rupees per share. If you look at the stock price movement in the last 6 months, it has rallied over 80%. On the charts, would you still say it is a breakout stock, or would you say that the rally is cooling off here on?
I will not say the rally is cooling off, but certainly I see the stock taking a breather after testing the highs around 678 levels. So perhaps those who are active investors not holding it for very short term can consider booking either full profits or at least 50% of their profits in Shyam Metalics, and can re-enter the stock above 680 levels. That is what my take on the stock would be. I think the stock, if it continues to consolidate or see some corrective retracement, it's better that some portion of the profits must be protected. Some money must be taken off the table. So I would recommend booking at least 50% of the profits in Shyam Metalics and trail the stop losses higher to around 600 levels. If the stock slips below 600, we must fully exit the position. Otherwise, re-entry can be done above 680. But right now, some 50% of the profits must be booked on this counter.
All right, book 50% profit on this particular counter. That's the view on Shyam Metalics. But let's talk about a Z. Milan, of course, merger uncertainty continues to be an overhang here. The stock has run up quite a bit, in anticipation of the merger. And, reports that Sony may not be keen to go ahead with it did, put the stock prices under pressure. But, after Z's clarification, we saw some bit of a bounce back from the day's low. But a lot of queries coming in on this particular stock. Anant Upadhyay wants to know whether one should be buying Z at the current levels or not. What would you advise?
If you look at ZIL Films, if you see that since August last year until now, the stock has pretty much done nothing, and it has stayed in a broad trading range between 238 and 290. Even as of now, the stock continues to remain in this range. So I don't think any attractive chart setup here. It is purely news driven. The positions here can get a little speculative in nature. There is nothing on the charts to analyze. It continues to remain in a very broad trading range of 240 on the lower side and 290 on the higher side. It has 200 DMA support at around 234. So I don't think one should, block any money here on this counter until this news flows get a little bit quiet from here. So I think one must avoid Z as well, unless we take any speculative calls here.
Even for trading purposes, one should avoid this counter, Milan?
Sorry?
Even for trading purposes, should one avoid
trading
this counter?
Purposes? For trading purposes, you can find the upsides slightly capped near 260 and the support exits at 234. There is nothing more on the charts to analyze on Z.
All right. Let's also focus in on a query from the fertilizer space. Gaurav Sharma wants to know at what level he should be buying into a Chambal fertilizer. We've seen fertilizer stocks do fairly well. Chambal fertilizer in particular has gained nearly 38% on a 6-month basis. Do you think one should wait it out for some bit of a dip to come in before buying, or do you think this is the right time to get into the counter?
I think the stock has possibility to retrace towards 368 levels. So, and one thing that it continues to remain in a secular uptrend. So I believe that one can enter into into fertilizers, but one should make staggered purchases. One can invest 50% of the available amount for Chambal right now and wait until it either goes above 400 or slips towards 350, towards 360 levels. But the present levels certainly make a case for 50% exposure in the stock. One can start accumulating the stock in a staggered manner.
Another stock query that has coming in is on Praveg. This stock has been in focus ever since there has been push to boost domestic tourism with respect to Lakshadweep, right? Praveg, this stock has been in focus over the last 5 sessions. It has rallied over 40%. So we have a query coming in from Naveen. Wants to know your thoughts. Do you think one should ride the wave, and given the focus and the fact that it has quite a few projects with respect to Lakshadweep, do you think there is far more upside on the charts on this particular one?
I'm sorry, Nandita, I didn't get the stock you are talking about.
Praveg.
I'm sorry, I'm not getting your voice.
All right. Okay, we'll skip this one then. Let's talk about another query then. Dodla Dairy. Juturu Pawan wants to understand what level should one look at entering into this particular stock. Do you track this one?
Nandita, I cannot hear you.
All right. I think there has been some bit of audio issue on Milan's front. We will be looking at fixing that pretty soon. But also in focus today will be SpiceJet, given the fact that there is a AGM that will take place today, and the company will be seeking the board not to raise as much as 2,200 crore rupees. And of course, remember, it is also in the fray to acquire Go First. That would also, that's of course report based. We'll have to see whether, that happens or not. But also there are source based reports that are saying that Carlyle Aviation is interested in a strategic investment in this particular airline. In fact, the president of Carlyle Aviation has recently met with SpiceJet CMD Ajay Singh. These are all according to sources, of course. And they have discussed prospects of strategies for SpiceJet as well as Spice Express. Now, Carlyle Aviation holds somewhere around 7% stake in SpiceJet, and promoter Ajay Singh holds somewhere around 57% stake in this particular counter. We'll touch base with Milan then. Milan, can you hear me now?
Yes, I can hear you.
All right. What are your thoughts on SpiceJet? How is that looking on the charts now?
SpiceJet, it looks pretty good on the charts after a steep or rather a decent up move. It's consolidating in a sideways manner. It has supported around 58 to 60 range. It looks good. Any move above 64.50, it can propel the stock higher. So it looks pretty decent on the charts.
All right, SpiceJet looking decent on the charts, but I was talking about a query on Dodla Dairy. This one is coming in from Juturu Pawan. Wants to know at what level he should be entering in this particular stock. What would you advise him?
I think one can continue to hold the stock if anyone is invested in it. One can enter at present levels, maintaining a stop loss of 860, a target of 120 to 1020 to 1025 can be expected.
All right. Next query. This one is coming in on DLF from Vishal. Wants to know your thoughts. Of course, realty stocks have been on an upswing. Yesterday, the realty pack was up 2.5%. On DLF particularly, what are the kind of levels you'll be watching out for? Currently quoting at 790 or thereabouts. Do you see more upside?
DLF is in continued uptrend and it might continue to move higher. That is one thing I can say. Coming to fresh entries, I would not suggest making a fresh entry because the stock may continue to inch higher, but any fresh entry may not come with a favorable risk to reward ratio. That is one point. But however, if anyone invested in the stock can continue to stay invested while trailing the stop losses higher to 745. the stock is in a very strong uptrend. It may continue to inch higher. And if it continues to inch higher, we can expect levels of around 790 to 800 on the stock. 800 to 810 on the stock.
All right, that's the view on DLF. Couple of last queries then. This one is coming in from Shivanshu on IEX. He holds shares at 171 rupees per share, wants to know whether he should continue to hold it. Making some bit of a loss, given the fact that the shares are quoting at 163 rupees. Would you advise him to hold or, book out, or what should he do?
I would advise him to hold, and I would advise him to maintain a very strict stop loss of 157 on the stock. Any slippage below 157, he should at that point in time make a move out of IEX. Otherwise, continue to hold as of now.
All right, some queries on the railway stocks, on our feed. IRCTC, Trilok wants to know how one should navigate this particular stock. Railway stocks, of course, most experts I speak to say that there's more steam left in the rally. On the charts, IRCTC, what should be the level for booking profits, if any?
IRCTC is in a little bit a tricky situation from a technical perspective. I see a formation of a rising wedge, which can lead to some minor corrective retracement. So I think 50% of profits in IRCTC should be booked now, and one can re-enter the stock fully above 930 levels. So moving past 930 would be important for the stock to make a meaningful move on the upside. Otherwise, we can see the stock taking some breather and showing minor corrective retracement from the current level. So I believe 50% of the profits should be booked now. For a fresh entry, one should wait until the stock goes above 930.
All right, that's the view on IRCTC. Then I hope that answers your query. But with that, I'm afraid we're running out of time. So this wraps up our query segment for today. But Milan, before I let you go, what are you recommending for our viewers this morning?
I'm wearing a slightly defensive look for today. My take would be on ITC. One can buy ITC above 465 and while keeping a stop loss of 454, one can expect 484 on ITC. The second pick would be from the pharma space. I recommend entering Cipla above 1290, expect 1340 as the target, maintain a stop loss of 1265.
All right, those are the stock recommendations. But any FNO strategy for the day, Milan?
FNO strategy, I would rather continue to play a neutral strategy. One can enter short strangle. One can sell 21,900 call for 18th January and also sell 21,300 put. You will collect a premium of around 70-80 bucks, and that is what I expect the yield to get generated on the capital by 18th of Jan. So around 2 to 2.5% of yields can be expected from the short strangle, so long as Nifty doesn't violate 21,900 on the upside or 21,300 on the downside.
All right, that's the FNO strategy for the day. With that, Milan, thanks a lot for taking out time and joining in and patiently answering all of your queries as well. Look forward to touching base with you sometime.
My pleasure. Thank you.
Thanks a lot. Well, with that, we are completely timed out on morning trade. But of course, from me and the entire team, thanks a lot for tuning in. You guys stay tuned because coming up next is Opening Bell.